India's economy is on the move. The latest GDP figures for the third quarter of fiscal year 2025, from October to December 2024, paint a picture of steady growth. At 6.2%, the GDP growth rate signals continued economic expansion, even as global uncertainties persist. This performance underscores the resilience of the Indian economy and its potential to become a global powerhouse. The stock market, a barometer of economic health, is watching these developments closely. Investors are eager to understand the underlying trends and their implications for future returns. This essay will delve into the key drivers of India's Q3 FY25 GDP growth. We'll analyze sectoral performances, examine government policies, and explore the impact of global events. By understanding these factors, investors can gain valuable insights into the future direction of the Indian economy and the stock market. Join us as we navigate the intricacies of India's economic landscape and uncover the opportunities that lie ahead. The 6.2% GDP growth in Q3 FY25 marks a notable acceleration from the 5.6% growth recorded in the previous quarter. This upward trend suggests that the Indian economy is gaining momentum. Compared to the robust 9.2% growth achieved in FY24, the current figures reflect a moderation. However, it's important to consider the global economic slowdown and geopolitical tensions that have impacted growth trajectories worldwide. Looking ahead, economists project India's FY25 GDP growth to reach 6.5%. Achieving this target will require a strong performance in the final quarter, with an estimated growth rate of 7.6%. The government's focus on infrastructure development, coupled with robust domestic demand, is expected to support growth in the coming months. However, inflationary pressures and potential global headwinds remain key factors to watch. The stock market will be keenly observing these economic indicators to gauge the sustainability of India's growth story. A closer look at sectoral performances reveals a mixed bag. Agriculture, the backbone of the Indian economy, exhibited steady growth at 5.6%. This positive performance can be attributed to favorable monsoon conditions and government support measures for farmers. The services sector, which accounts for a significant portion of India's GDP, continued its strong showing with a growth rate of 7.4%. Within this sector, trade, hotels, transport, communication, and broadcasting emerged as star performers, driven by pent-up demand and increased consumer spending. The manufacturing sector, however, lagged behind with a modest growth rate of 3.5%. This can be attributed to subdued global demand and inflationary pressures impacting input costs. The construction sector, on the other hand, displayed resilience with a 7% growth rate, fueled by government infrastructure projects and a revival in real estate activity. Utilities and mining sectors registered moderate growth rates of 5.1% and 4.2% respectively. Section 4. Fueling the engine: expenditure, investment and consumption. Analyzing expenditure and investment patterns provides further insights into India's economic growth. Private consumption, a key driver of demand, recorded a healthy growth rate of 6.9%. This indicates increasing consumer confidence and a willingness to spend. Government spending also played a crucial role, surging by 8.3% in Q3 FY25 compared to 3.8% in the previous quarter. This surge reflects the government's commitment to infrastructure development and social welfare programs. Gross fixed capital formation, a measure of investment in the economy, stood at 27.6% of GDP. This indicates a healthy level of investment activity, which is essential for long-term economic growth. The combination of robust private consumption, increased government spending, and steady investment activity bodes well for sustained economic expansion in the coming quarters. Section 5. Global trade, wins navigating exports and imports. India's trade performance in Q3 FY25 presents a mixed picture. Exports continued their strong run, registering a robust growth rate of 10.4%. This positive trend can be attributed to strong demand for Indian goods, particularly in sectors such as engineering goods, electronics, pharmaceuticals, and inorganic chemicals. However, imports contracted for the third consecutive quarter, reflecting softening domestic demand and lower global commodity prices. While the export growth is encouraging, the continued contraction in imports could potentially impact domestic industries reliant on imported inputs. The government is actively pursuing free trade agreements and promoting exports to further boost India's global trade performance. The outcome of these efforts will be crucial for sustaining economic growth and attracting foreign investment. Section 6. Fiscal Fitness Check: Government Finances and Tax Collections. Examining the government's fiscal position provides valuable insights into its ability to support economic growth. As of January 2025, India's fiscal deficit reached 74.5% of the annual target, amounting to 11.70 lakh crore rupees. While this figure raises concerns about fiscal discipline, it's important to note that the government has maintained its commitment to fiscal consolidation. The government's focus on capital expenditure over revenue expenditure is a positive sign, as it lays the foundation for long-term growth. On the revenue front, goods and services tax collections continued their upward trajectory, registering an 8.3% growth in Q3 FY25. This positive trend reflects increased economic activity and improved compliance. Other indicators, such as vehicle registrations and income tax return filings, also point towards a healthy economy. India's foreign exchange reserves stood at a comfortable $640.47 billion as of February 21, 2025, providing a cushion against external shocks. Section 7. Expert Outlook: Charting India's Economic Trajectory. Economic experts maintain a cautiously optimistic outlook for the Indian economy. While acknowledging the global headwinds and domestic challenges, they highlight India's strong fundamentals and growth potential. The Reserve Bank of India is expected to continue its accommodative monetary policy stance to support growth. Experts anticipate further rate cuts in the coming months to boost investment and consumption. However, concerns remain about global trade uncertainties, particularly in light of potential US tariffs under a possible Trump administration. Despite these challenges, India's strong domestic demand, coupled with government reforms and infrastructure investments, is expected to drive economic growth in the medium to long term. The stock market will be closely watching the RBI's policy actions and global economic developments to assess the impact on corporate earnings and investor sentiment.